Good morning, everybody. It's Friday, December 2nd, 5:44 a.m. Central Time as I speak here. March corn futures down 4 3/4 at 655 3/4. January soybeans down 2 at 1427 3/4. March Chicago wheat down 12 1/4 at 770 3/4. March Kansas City wheat down 17 1/4 at 873. March spring wheat down 7 at 931. Yesterday, the EPA released updated biofuel proposals, and the markets were not happy about this. The soybean oil market finished yesterday's session limit down. The nearby January 23 soybean contract lost nearly 40 cents per bushel. So I think that there was something to be desired in regard to the proposals for biodiesel in particular. I'm not an expert on the RFS or RVOs or RINs or any of that stuff, but I spoke yesterday with somebody who was. Check out the YouTube video that I posted yesterday afternoon, guys. I did an interview or a discussion with Paul Winters. He's from the Clean Fuel Alliance America. That's formerly the National Biodiesel Board. His group, which represents, biodiesel producers, people in the soybean industry, all of those things, they were very critical of the decision or the proposals yesterday. And these are just proposals. They had kind of a critical statement released on their website. So I would very much suggest that you take a look at that video. In addition to that, I have a statement that I'd like to read to you regarding this situation. This is from Dave Walton, who represents the Iowa Soybean Association and also the Iowa Biodiesel Board. He said this in a statement yesterday. It's a long statement. I'm going to read the whole thing to you. While we recognize that the EPA's proposed 2022 renewable fuel standard volumes include some growth for the biodiesel industry, by any measure, it is very conservative growth, and that will be detrimental. The 60 million gallons of RFS volume growth proposed by EPA for 2023, for example, is a far cry from what other agencies are projecting to come online. The Energy Information Administration predicts 500 million gallons of added biodiesel and renewable diesel in 2023. EPA should take that into account. Frankly, this small increase in growth would send negative signals to the market. Significant investments have been made in feedstock infrastructure like soybean crushing plants, and the administration would undercut that. Iowa's 11 biodiesel plants, which have a proven history of generating economic growth and jobs while reducing the nation's carbon footprint, also stand to lose under this proposal. That means our state's rural economy and Iowa soybean farmers, who rely on strong commodity demand to support their livelihoods, also come up short if this proposal is finalized. If decarbonization is truly a national priority, then biodiesel is one of the best technologies available to achieve that right now, not decades in the future. We will continue to work with EPA through this process in hopes that the agency will take a more forward-looking approach and more aggressive growth in the true spirit of the RFS. That's from Dave Walton, who represents, again, the Iowa Soybean Association and also the Iowa Biodiesel Board. So industry groups very critical of this EPA stuff. These are just proposals. There's a comment period. We'll see what happens. If you guys want some more information about this, you got to check out my premium subscription. I had a ton of information regarding the soybean crush expansion this week. I think I do a video every day. So I've done 4 videos so far this week. I think 3 of them were in regard to the soybean crush expansion. I had Steve Nicholson from Rabobank on Monday. I had Gordon Denny, who's representing some soybean associations here in the U.S., on Wednesday. I did a video regarding USDA's projections about this whole situation yesterday. In 2023 acres, the soybean market's not really attempting to pull acres at this point, which is interesting considering all of this crush expansion talk. So guys, check out the premium deal today if you have not already. $50 a month, cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else, I promise. Back into the news here. It looks like a U.S. rail strike is going to be averted. So the Senate passed a bill yesterday that would force unions to adopt an earlier labor agreement, one that does not include expanded paid sick leave. So the bill passed the Senate in an 80-15 vote. President Biden said he is prepared to sign any resolution passed by Congress to prevent a strike. Under the Railway Labor Act, Congress can make both sides accept an agreement in order to keep the U.S. economy out of harm's way, and that's what will happen the way that it looks. There's going to be a 5-year agreement. It will include a 24% pay increase for rail workers and will allow for 1 additional paid day off in addition to existing vacation and paid time off. So a grain logistics disaster here appears to have been averted for the moment. Biden should sign this thing today. I don't know if the union's going to be thrilled about this. I know Biden's supposed to be a pro-union president, but he's got to keep the economy from falling apart, and the economy may very well fall apart if there was a rail strike. Brazilian crop estimates are rising. Well-followed private group StoneX released updated corn and soybean production estimates yesterday. They pegged the Brazilian soybean crop at 155 million metric tons, monster crop being projected, just up slightly from their previous estimate of 154.3. USDA is at 152. They pegged the Brazilian corn crop at 130.3, up from 129.9 previously. USDA is at 126, so StoneX is higher than USDA with both of their numbers. Weather in Brazil has been mostly favorable as soybean planting nears completion. Their second and larger corn crop, which is like 3/4 of annual production, that will not be planted until after the first of the year. Trade officials from the U.S. and Mexico met to discuss a number of topics this week. U.S. Trade Rep Catherine Tai met with Mexico's economic minister in order to discuss corn exports, energy, and environmental issues, among other things. The U.S. Trade Rep's office said in a statement that Tai stressed the importance of avoiding any disruption in U.S. corn exports to Mexico. Talks also involved a U.S. Trade Rep complaint from this past July regarding Mexico's nationalistic energy policy. The U.S. says that Mexico has some energy policies that violate the USMCA. Mexican laws prioritize some of their state-run companies in regard to some issues. In the U.S. and Canada, they say that that provides kind of a disadvantage for them competitively. So maybe that's where this all stems from. I feel like Mexico's looking for some sort of leverage here. Mexico's planned ban of GMO corn, of course, which would be in effect in 2024. I mean, that would impact your 2023 crop in regard to exports. So this is something I think it's going to get sorted out, but still some news kind of flowing here. Drought remains active across the majority of U.S. corn, soybean, and winter wheat areas. The percentages of crop areas experiencing drought have kind of leveled off in recent weeks. We haven't seen a big increase the last 3 or 4 weeks, but we're still sharply elevated versus the levels that we saw this past spring and early summer. U.S. winter wheat areas experiencing a drought total 74%. Corn and soybean areas experiencing a drought in the United States total 66% and 68% respectively. So drought still very much an issue here. U.S. wheat export sales remain very poor. U.S. exporters sold a net total of just 156,000 metric tons of wheat for the current marketing year yesterday. U.S. wheat still overpriced on the export market. Wheat futures fell into like some fresh 2 or 3 month lows this morning, depending on the class, but very poor action in the market. Total wheat export commitments for the current marketing year are the worst in more than 2 decades, just bottom of the barrel wheat export business. Soybean sales were okay. 694,000 total soybean commitments for the current marketing year, 4th best of the last 10 years. So we've got an average soybean book. Corn sales were okay at 603. Total corn commitments for the current marketing year, 3rd worst of the last 10 years. So the corn export sales book is not good. A lot of that is due to lackluster Chinese purchases versus the last couple of years when they were a lot more aggressive. Cattle market was lower yesterday. We saw just a marginally lower trade in live cattle. Feeder cattle were actually higher. There's a little bit of light cash cattle trade in the north reported at 157. Outside markets, the U.S. dollar is about flat. S&P and the Dow Jones down just a little bit. Gold's down $2. Crude oil is up just 9 cents at 81.31 in the January WTI. Have a great weekend, guys. I will talk to you on Monday.